How to avoid strangle blowups in crazy markets. In this video, I want to talk about how strangles blow up, how to easily avoid crazy markets, and just historical examples of my own on how to actually exit before things go pretty crazy. My name is Eli. I'm a professional options trader. I manage over $8.7 million. And if you're interested in any mentorship, email me. We can see if we are a good fit for one another. Let's begin with the video. So how strangles blow up. And this is specifically for the futures market, or even more specifically to the commodities market. With commodities, the risk is to the upside. Commodities crash upwards. Stocks and indexes, they crash downwards. So therefore, the risk is to the downside. And commodities are a bit different. So 99% of losses on short strangles are due to the price crashing upwards. Again, for commodities. So usually you will only lose on the call side when you sell a strangle for the most part. In my case, it's my only losses. I had 3 losses in the past 3 years as a professional trader, as a professional money manager, and they were all because of an up move. And I'll go over each and every example. You will see it makes a lot of sense why I exited early and kept the losses pretty small. The price crashes upwards because of a major news that shifts the supply and demand balance of the commodity. So usually it's something like a mine collapse or something to do with either restricting the supply or really increasing the demand. So these are the two types of news that usually bring the price upwards. And we'll go over a few examples, like I said. In most cases, once the news are released, there is a window of about 12 hours before the price keeps moving upwards after the initial up move, and this is exactly when I exit the position if the news are pretty critical and it's something that I don't want to be dealing with. So this is a typical behavior of a losing strangle with more than 35 days to expiration. Strangles with less DT tend to quickly lose, and it makes it much harder to react and exit based on news. It's also pretty important to distinguish that these are not strangles with 10 days to expiration or 15. With these strangles, the gamma is so big you will not be able to react quickly. Now, how to easily avoid crazy markets. Avoiding crazy price moves is easier than you think actually. Analyze the fundamentals of the product every day while in a trade, or if there is a big price move. So number one, what I do every single day while I'm in a trade, I ask myself 3 questions. Is there a fundamental reason for the price to go up? Is there a fundamental reason for the price to go down? And are the news critical or not critical? Or actually, are the news critical? By answering these questions, you can easily decide if you should close the position or not. And the only combination where I would keep the position open is if the answer for each and every question is no. So there's no reason for the price to go up. There's no reason for the price to go down. And and the news are not critical, right? This is specifically for a short strangle. If there's a yes in for any of the questions, then the position needs to be closed as it is too risky to keep it open. Some will heavily hedge at this point, which is also an option. I'd rather exit the position to reduce stress and the risk. So I think it's pretty self-explanatory. Now, at this point, I want to show you an example, like actually 3 real examples, so it kind of all connects for you and makes sense. I'm actually going to show you 2 really good examples. So these are 2 of my personal losses. Now, first one is copper. In March 2024, I had a triangle on copper. You can see I've entered right where the price was, give or take around here. And as you can see, the price has been moving sideways within this massive side trend. So I decided to enter a short strangle. Now, everything was okay for a few days. And then on this day over here, or actually I think it was the next day, here we go. So on this day specifically, the price went up 1.32%, which is it's not little at all, and news came out of a potential copper mine collapse. So right after the news came out, I was looking to see how big is the copper mine, how serious is the report, and you can just Google it. You can use any AI chatbot or just Google it and kind of read through the reports. and it doesn't happen like within seconds. I was sitting deciding for over an hour if I should exit or not. And my conclusion was it was the second or one of the biggest copper mines in the world, and the report was that it was completely collapsed, and they were not sure of the damage as of yet. So they couldn't say for sure, and the news obviously will come out later to tell us if it's an actual serious collapse or not. But if something like this happens, it opens the door for volatility, for uncertainty. So for me, this is very critical news, right? And if I have a yes in one of my questions, in this case, if there is a fundamental reason for the price to go up, the answer will be yes, because supply will go down if the copper mine actually collapsed. And this is pretty critical news, right? So we have two yeses. So I close the position here for a loss of 10% of credit. And this is what happened next once the mine was confirmed to be actually down. Price went up because the supply went down and demand stayed the same. Price went up. So obviously I saved myself a full loss over here, or worse. Some people just end up holding their position for forever, right? So this is one position, very, very simple analysis that kind of saves you, and you can just kind of exit instead of blowing your account. And these things, they don't happen often, but when they do happen, you have pretty crazy news that drive it. So let me show you another, see here, another situation. So this is a short triangle I had on wheat. It was also going into, well, at that point it was going into April because it was a pretty long position. And this position, I think I actually closed for a bit of profit if I remember correctly, but I still consider it as a loss because I think I closed for break even, and the fees turned it into a small loss, which is totally fine for me. It's still a break even, but I do treat it as a loss. So I think it was either this day or the next day. I believe it was the next day when there was a really big price move, 3.66% on the day. And the position went from being up like 20 some percent or even a bit more to just being basically break even. On this day over here, volatility expanded. And when I looked at the news, and by the way, I just read the news over here at the Trading Views news section, or I just go and I just Google and see what's going on. So what happened here is Russia declared that they will not renew their agreement with Ukraine, which lets Ukraine export wheat to the world. So basically, they're going to cripple the wheat supply to parts of the world by not letting Ukraine export it, by not renewing the deal that they had when the conflict just began. Right? So this means the supply will go down, demand will stay the same, price has to shoot up. So is there a fundamental reason for the price to go up? Absolutely yes. Is there a fundamental reason for the price to go down? There's no reason right now. And are the news critical? Yes, they are very, very critical. So for me, fundamentals shifted. I closed the position here for a very tiny loss. And obviously what happened next is price kept going up, and because the agreement didn't get renewed up until it did. So when the agreement got renewed in one of those days over here, price went down. So, but obviously we don't know if it's going to happen or not going to happen. And by then I would have been so deep in the money with my short strike, call short strike, that I would have taken a massive loss for no good reason. So here's another example, and these are usually the losses that you take with short strangles, especially when you open them when the price is somewhat moving sideways, where you don't have a specific direction, right? And I think this just kind of shows you how fundamentals are really important, and fundamentals should dictate your decision making. I am all about fundamentals. They dictate my entry, my exits, and everything in between. Really, my entire decision making is dictated by fundamentals. Even if price would have moved up so much, but I read the news and there is nothing there. It's just fake hype, and price just gonna keeps going up on just fake news, or not fake news but fake hype. then I would stay in a position. And it happened many times before, and I stayed in a position, and price just kind of reversed every single time. So if there's no fundamental reason for a price to go up, it's not going to keep going up indefinitely like it does pretty much over here, right? This is also a pretty sweet thing about commodities. They are very supply and demand driven, which is absolutely amazing because it makes it much easier to open positions and close them. So hopefully this video was useful for you. If you have any questions, leave them in the comment section. Thank you again, and I will catch you in the next one.